Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be doing now one question where one partner is insolvent. In question they have given the details of contingent liability, that is an action for damages. It is filed by the outsider against the firm. At the time of dissolution it becomes matured. How to record it? Ganga, Yamuna, Godavari are in partnership sharing profits and losses equally. That means ratio is 1:1:1. Their balance sheet as on 31st December 2011 was as follows. Balance sheet as on 31st December 2011. Let us start with asset side. Current account of Yamuna Godavari. It is given on asset side. That means it has got debit balance. This will be directly transferred to their capital accounts on debit side. Premises will be transferred to realization account debit. Machinery realization account debit. Debtors realization account debit. Cash, it will be transferred to cash account debit side to balance brought down. Liability side, capital accounts are given of Ganga, Yamuna, Godavari, partners capital account credit. Ganga's current account given on liability side, so it has got credit balance. It will be transferred to her capital account on credit side. Sundry creditors, bank loan, these liabilities will be transferred to the credit of realization account. Godavari was declared insolvent and hence the firm was dissolved as on that date. A premise was sold at rupees 14,800. Machinery realized 6,400. So two assets are sold. So amount is received. So cash account will be debit. Realization account will be credit. Bad debts and discount allowed to debtors amounted to 1,600. Here we are required to understand how to calculate amount received from debtors. Book value of debtors is 9,600. 9,600 minus discount and bad debts 1,600. So actual amount received from debtors is 8,000. Entry for discount allowed or bad debts for 1,600 is not required to be done. Directly entry will be recorded for 8,000. Cash account debit, realization account credit. Sundry creditors agreed to receive 80 paise in a rupee in full satisfaction of their claim. This is another method of showing how creditors are settled. 80 paise in a rupee means what? It means 80% of amount is given to them and they have given us 20% discount. So creditors here amount is 4,000. So of this 20% will be given as discount. So 4,000, 20% is 800. So actual amount paid to creditors will be 3,200. We have to record entry only for 3,200. Cash will be credited, realization account will be debited. Bank loan was settled at 60% of book value. Bank loan is 3,000. So we have to take 60% of it. So it will be 1,800. So actual bank loan is paid 1,800. Cash will be credited. Realization account will be debited. Balance 40%, which is waived by the bank, that is income. But we are not required to record that 40%. It gets adjusted with realization account. During the course of dissolution, a liability under an action for damages, this is the most important adjustment in this question, was settled for 1,400 against 2,100. Here two figures are important, 2,100, 1,400. There is a action against the firm where third party has claimed 2,100. Firm has not made any provision for that. At the time of dissolution, this liability is matured. It was contingent, but it has got now matured. But settled for what amount? Settled for 1,400. So our entry will be only for 1,400. We have to ignore the figure of 2,100. 1,400 paid, so cash will be credited. Realization account will be debited. The expense of realization amounted to 900. Cash credit, realization account will be debit. This is amount paid for realization expenses. Godavari contributed 1,900 from her private estate. That is, amount recovered from her estate is 1,900.
Sir. Finger takada.
Cash debit and Godavari account will be credit. Amount received from Godavari, cash will be debited and Godavari's account will be credited. Prepare necessary ledger accounts in the books of the firm. Let us start solving the question. First step is transferring all the items from balance sheet to various accounts. We'll start with asset side. Current account of Yamuna, Godavari will be directly transferred to their capital account on debit side. Partners capital account debit side to current account Yamuna 2,000, Godavari 4,000. Alternatively, current accounts can be opened separately. There, this balance will be transferred on debit side to balance brought down. Then all effects will be given in current account. Finally, current account will be closed and balance will be transferred to capital account. At the time of dissolution, it becomes easy to first transfer available balance in current account, debit or credit, to respective capital account of the partners and give all effects of dissolution in partners capital account. Both the way it is correct. Premises, machinery, debtors will be transferred to the debit of realization account. Realization account debit side to sundry assets, premises, machinery, debtors Total book value 37,600. Asset side, last item cash 6,400. This will be transferred to the debit of cash bank account. Cash bank account debit side, to balance brought down 6,400. Asset side is transferred. Let us move to liability side. Capital account of Ganga, Yamuna, Godavari will be transferred to their capital account credit side. Partners capital account credit by balance brought down, Ganga 25,000, Yamuna 10,000, Godavari 5,000. Ganga's current account 3,000. This will be transferred to her capital account on credit side. Liability side, sundry creditors, bank loan, these two items will be transferred to realization account on credit side. Realization account credit side, by sundry liabilities, sundry creditors 4,000, bank loan 3,000, total book value 7,000. Cash bank account debit side to realization account, assets sold, premises, machinery, debtors realized, total 29,200. This will have second effect, realization account credit side. Realization account credit side, by cash bank for realization of premises, machinery, debtors 29,200 total. Sundry creditors agreed to receive 80 paise in a rupee in full satisfaction of their claim. It means sundry creditors have given us 20% discount. Creditors are 4,000. 20% discount means 800. 4,000 minus 800. Actual amount paid will be 3,200. This will be credited to cash bank account and debited to realization account.
सर उद्या सडन ठेवू नका सर हँड दाखवला ना की मग काढा.
असं realization account debit to cash bank 3,200. Creditors paid at discount. Cash bank account credit side, by realization account, creditors paid at discount 3,200. Bank loan was settled at 60% of book value. Bank loan is 3,000. Settled for 60% means bank has waived, not taken, balance 40%. So 60% of 3,000 is 1,800. So actual amount of loan is settled at 1800. Cash account will be credited, realization account will be debited. Realization account debit side to cash bank 1800 for bank loan settled. Cash bank account credit by realization account bank loan settled 1800. During the course of dissolution, a liability under an action for damages, contingent liability, was settled for 1400 against 2100 not provided in the books of the firm. So this is unrecorded or contingent liability of 2100 finally got settled for 1400 at the time of dissolution. So we have to record entry only for 1400. Cash bank account will be credited and realization account will be debited. Realization account debit to cash bank 1400 liability for damages. Cash bank account credit by realization account 1400 for payment of liability for damages. The expenses of realization amounted to rupees 900. 900 paid, cash will be credited, realization account will be debited. Realization account debit to cash bank expenses paid 900. Cash bank account credit by realization account 900 for realization expenses paid. Godavari contributed 1900 from her private property. Amount is received in her insolvency. Cash account will be debited and her capital account will be credited. Cash bank account debit side to Godavari's capital account 1900. Godavari's capital account credit side by cash bank account 1900. Amount received from her private estate. With this, we have recorded all adjustments. Let us now close first realization account. Realization account is closed. It shows loss of 8700. This is divided among all partners equally in the ratio of 1:1:1. Ganga 2900, Yamuna 2900, Godavari 2900. This will be transferred to the debit of their capital accounts. Partners capital account debit, Ganga, Yamuna, Godavari. To realization account, loss transferred 2,900, 2,900 and 2,900. Now here Godavari has become insolvent. We have received possible amount from her private estate, which we have already recorded 1,900. Now we shall close her account to find her deficiency. Here Godavari's account debit total is 6,900. Credit total is also 6,900. It means there is no deficiency involved in insolvent partners capital account. Student, here we should not get confused. If partner has become insolvent, it means there must be deficiency in his account. That should not be the rule. Here, whatever facts given in the question, we are coming across a situation where there is no deficiency because debit as well as credit is same. Godavari's capital account got closed. Now we shall close other partners capital account. Ganga's capital account, we are having balancing figure on debit side 25,100. Yamuna's capital account, we are having balancing figure on debit side 5,100. This will be transferred to cash bank account. Cash bank account credit side by Ganga's capital account 25,100. Cash bank account credit by Ganga's capital account 25,100. This is amount paid to her in final settlement. By Yamuna's capital account 5,100. Amount paid to her in final settlement. Now finally we are required to close cash bank account. Total of debit side is 37,500. Total of credit side is 37,500. Debit as well as credit is agreeing, matching. That means cash bank account is tally. It shows that we have done all our ledger accounts correctly. In this question, we were required to focus on number 1, partners' current accounts were given. Number 2, liability for damages under action was given. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.